Hello. How you doing? Good morning. G'day, mate. Great day music. Jeff. B. Krosky. 3 times mole money shorting. What's happening? Prime fishing, hey. Sarah, how you doing? So, we're still in the wedge. Still in the pennant formation. Any movement, exciting or otherwise, it doesn't really matter at this point because we're still within range. We're certainly squeezing. Our highs are getting lower, our lows are getting higher, so we're reaching the pinch point, which happens on... How many days we got left of this? This pennant lasts for another 1, 2, 3, 4, 5, 6, 7. Let's just say about a week. I'm pretty sure we're going to leave the pennant before a week is up. But if you can check out this box, this is the range box that we're in. Got lows and highs. The extreme point, and then the extreme resistance. So extreme support, extreme resistance, and we still exist within the wedge, of course. So as far as the market goes, we've got less than 11 minutes till the new daily candle starts, and let's check how things are going on the oscillators as well. Still depicting a slow climb on the MACD histogram here. Of course, the actual MACD has not been above the baseline for a long time now. Since the 10th of April is when we cross below the baseline on the MACD, which is right about here. So yeah, the MACD's been pretty weak this whole time. It's almost 2 months. Wait, is that longer than 2 months? Let me measure that. If I'm saying 11th of April and it's almost 11th of July, May, June, July, it's almost 3 months. Okay, so we've been weak on the daily for almost 3 months now. That's pretty typical of, like, you know, a bear market, I guess, and accumulation, reaccumulation. Silver Fox and Chris's Journey in the Philippines province. Welcome aboard. If you haven't smashed the like button, do that now. Let me just get rid of some of these lines as well. By the way, we are still in this huge falling wedge, and falling wedges are bullish. So, yes, we've spent some time on the bottom side of the wedge lately, in the last month or so. However, I think a push to the top of the wedge could be on the cards. We might be seeing a run up. What causes that run up may be, a retest first of the bottom of the wedge. We just have to wait to see how this pennant plays out. This purple pennant that I have here, or pink, whatever you want to call this. I guess it's like fuchsia, something like that. Once we see the result of this, we'll get more of an understanding. When it breaks out, just remember it could be a fake out. So it could be gearing up to push down only to bounce quite dramatically up to trap, potential bears opening shorts in the wrong spot. So yeah, opening shorts in this current market situation is quite risky because we've already come down considerably. It's kind of like opening a long at the top of them, up here, You wouldn't open longs when it's been, ripping up for so long. So we've ripped down, we've dropped so much lately that it's now, you've kind of missed the opportunity to do those big shorts on the moves down. But yeah, the longer you delay it, the riskier it becomes. So this is why this is a good time to consider accumulating, in my opinion. So now from here, let's check out some of the alts as well. I would say that not many of the alts are moving yet, because I think a lot of participants in the market would be waiting to see what happens as a result of this squeeze here that we're going through. So I think a lot of money is sitting in stable coins like Tether, USDC, BUSD, that kind of thing. And it's waiting to flow back into the actual cryptos. Because, we all know that stable coins aren't exactly a crypto. So, sorry, bear with me. I've got a really sore throat today for some reason. But yeah, hopefully it's not COVID. Anyway, I'll have a look at Matic, because that's been doing really well. It had a nice pullback. We've made a higher low. This is the daily, mind you. So we've come up 95% from the dramatic low of the dip, and it looks like it's having another swing up. It's come up, 26.5% off that second low there, which has been a higher low. Very cool. I think the reason for that is because of how dramatic the sell-off was on Matic from the all-time high. I'm not sure if it's one of the highest, but it's up there and among the highest retracements of the altcoins. Look at that. It's almost 90% down from all-time high. So a lot of room to recover going into the next cycle. But I feel like we're sort of heading into that time where things just get a bit stagnant and frozen, like a crypto winter, if you will. Let me make a bit of a comparison back here. So if I get a rectangle, and we'll make this blue because it's the crypto winter, right? fill it with ice, like this. And see, heading into these these low volatility areas, like low temperature, you can see that the volatility just drops right out because there's just not much interest in participating in a market that doesn't really swing around. Like it doesn't move very far at all. It doesn't produce the differential that you need from bottom to top to make it worth trading. So, and it's for a reason, and that's accumulation. So you can see these periods can drag on for some time. I mean, you could consider this whole area here. There's a fair amount of volatility when you zoom in, but if you're comparing it to let me just find the comparison for you. See, it's made up of like stages as well. Like there's a lot of so-called Bart Simpson happening here. You go down, across, up, down, across, up, up, across, down, and there's little ones here and there as well. But yeah, that's how Bitcoin used to behave quite often. Back through here, if we were to go on a smaller time frame, you'd see them everywhere. But yeah, what I was getting at is, in relation to the cycle we've just come out of, these areas are very flat with low volatility, and that's potentially what we're facing, a crypto winter type thing. So we may be stuck in some kind of a range. You know, maybe the range is a bit taller, but if you see the last sort of 3 cycles, I know this range is probably a bit more like this. It's a bit of a broader range, a lot more activity happening in that range. But yeah, we've seen some pretty dull and boring periods after the previous all-time high. So I think I would still consider the moves down as quite volatile. Like we haven't really been through a winter yet. This could be the start of one, like one of these long periods that go for 12 months where activity just drops and it just stays around 20K for some time. But, you know, it'd be nice to see a further drop. But if not a further drop, then just more sideways, unfortunately, for the traders out there. For investors, though, this is awesome. This gives you time to earn fiat and then come back and accumulate, you know, the amount you're comfortable accumulating with. You know, if your ceiling is about 1,000, you only want to put it about $1,000 into the market, then, you know, take your time. Just put in $50 here and there. You know, if you're thinking 10,000, maybe take your time with that. Like maybe do 1,000 a month or 1,000 every 2 months or something like that. You just have to space it out and don't rush. Don't feel like you have to get in today, because I think there's a big chance that we're going to be bouncing around the block for some time. You know, maybe we'll get some rips here and there, but I see price hanging around 20 potentially. It just makes sense. Like if you look back here, it's kind of what we've had in the past. We're heading into another zone like that. Now, that's not to say that alts can't still move heavy. And look at that. We're 1 minute into the new daily candle. Let's check how we did yesterday. A bit of a doji, like a spinning top. So a little bit of indecision. It went up fairly high. We almost came to the top of the... Let me just delete this box so we can see better. We almost came to the top of the pennant there. You know, some might argue that that was a test of the top of the pennant that we just had. Right there. You know, just like back here, I mean, there wasn't enough action to see it rip to the top and test the top of the pennant. It was acting as more of a range, a resistance line, like horizontal line of resistance, which, you know, it retested that here, but failed to break through. So, yeah, I think this is close enough to say that that was a test of that high of the pennant that we have here. Some exchanges might have gone up higher and actually come into contact. Some might have come lower. You know, some might have only wicked to there. But this is Binance. This is the majority of Bitcoin is traded on Binance, the Bitcoin tether pairing. So that's why I always use this chart. It's the majority of the volume for Bitcoin against the tether, basically. But yeah, I mean, obviously there's a lot of activity outside of exchanges that goes on as well, like peer-to-peer buying and selling. That does not influence price. What it can do is if it gets into the hands of someone that bought it off a miner or whatever, the person now holding it can bring it onto an exchange for the purpose of selling at, you know, at the current market price. But yeah, it is interesting. It's not all just exchange, you know, trading that goes on with Bitcoin. Like there would be a lot of off-chain, off exchange transacting as well. So far, I know it's early days. We're only 3 minutes in, but this could be a higher low that we're dealing with. If I just go to the 1 hour here. Got this, well, this low is the first one. That's the second. This area would be the third, fourth, and if we maintain 20k, like potentially we'll retest it and then maybe come up for another test of the high to see if we can break through. But at least for now, this is what we're getting. Let's see what's off to an interesting start already. Dogecoin is still under 7 cents. It's kind of stalled a bit. Yeah. It's hit a range and it's kind of stuck here at the moment. So not too much volatility off Doge at the moment, but that could change at the drop of a hat, as we know, because Bitcoin might get the party started if it breaks out. But yeah, I'm not convinced yet. I think yeah, we just have to wait and see what happens outside of this pennant. It's cool to see it like come up and test the high, the top half of the pennant. So there is a bit of interest there of buying. There is a bit of bull activity going on, but nowhere near the amount that we need to drive us up to the next threshold, which is around 30k. So nice, Dan. So Dan's been accumulating since 70 cents. Or 0.7. Or is that 70 cents? So was Spell a glitch when it was showing $10 to 3,332? I'm not sure what you mean by that. So yeah, I mean, it's not a hell of a lot to talk about. We're still in the same boat that we've been in for the last 30 days, I guess. Let's count it out. 22 days. So it hasn't even been a month yet, but a month is pretty much where the apex of this pennant is. That's 1 month from inside the pennant. So yeah, let's see what happens. I might throw in a maybe I'll ask the audience. I'm going to create a poll. Do we break out bullish or do we break down bearish from the pennant? Let me type this out. Ask it this way. How do we out of this pennant? Say bullish or bearish. I'll even make it easy for you guys by putting up and down in brackets here. There we go. Okay, so that poll's coming up. Cast your vote. Let's see what the crowd thinks. We've got 37 people in the stream. Thank you for tuning in, guys. I know this isn't the most entertaining part of the market. It's quite boring and stable. we want to see a return to volatility, but yeah, we might have to be patient. I'm not saying that it can't happen. You know, if we get a return to a bull market before the end of the year, that'd be amazing. That'd be really, really fun. But it would also be nice to have a bit more time to accumulate as well. But yeah, we'll just have to take it as it comes, obviously. We don't get to choose. So, and yeah, as far as a range goes, obviously we're still in not just the pennant, but the range between 22,000 and 17,600. So that's another zone we have to break out of. So this pennant, as it's been building for some time now, it may only produce a push to retest the boundaries of this rectangle, you know? It might not be enough to spark the next major move. It might just be a test of the boundaries of this rectangle. We'll see. And what it ends up doing will be very telling of what the market, you know, is going to do for the rest of the year. I think, like, if we come up and hit our head here and get rejected, that to me is gonna take all of the enthusiasm out of the market, in my opinion. If we break down, find support at 17.6 and then come up, similar again. I think it's gonna just flatten, and it might squeeze for some time, just like we've seen back here in the previous winter, crypto winters, so to speak. Back here, these three zones. So yeah, let's see what happens. So 73% of 11 people think that we're gonna head down. I'm kind of in the same party as that. James says, it can keep going down as much as it wants. I'm gonna keep buying. Yeah, that's the right attitude, for sure. Jeff says, bearish. Should use this time, Rick, to get into some fundamentals because I believe we are gonna enter the age of utility. and DeFi. Yeah, oh, fair enough. Like a bit of research, bit of yeah. I mean, that's an idea. Hushi says the coin spell on Gemini went from $10 to $3,332 2 days ago. They locked the coin so no one could buy it. Don't know if it did it on any other site. Yeah, that's news to me. It sounds like a pump and dump. But yeah, that's insane. You know what pumps a coin to those levels is when no one owns the coin. No one owns it, so they can't put resistance against it. Because in order to build a resistance, you have to own the coin. To create a sell wall, you need to hold that coin. So that's why these quiet, sleepy old cryptos that no one holds can get pumped so easily to really high prices because there's no resistance. And you see a lot of these alts get pumped during a bull market because it's the cheapest thing to do it on. So just be careful and don't buy in late on a pump because you'll be a bag holder and that can go on forever. You can eventually, there's some coins that have never recovered after their pump. And yeah, you're stuck holding bags of something that will never get to those levels naturally, unless you've got 10 years on your side. But yeah, that's the whole point of not holding bags, is that you want your capital to be moving. You want access to your capital to be able to perform trades, or at least be in something that is accumulating value over time, and not you're not just wasting your time waiting for something to return. Dollar cost averaging is not a bad sort of way to try and recover bad holdings. Let's take Doge for an example on that. So I know a fair few people last year got caught up in the hype and buying it from just after SNL with big hopes that it was going to go to the moon because of Elon Musk. But yeah, ever since SNL, we just have not made any higher highs on the macro scale. So yeah, there would be people holding it from all over the place, like up here, some through 50 cents, 40, 30, just pick the big round numbers, and there'd be a lot of people holding in those areas. If you spent, let's say you put $5,000, you just aped into Dogecoin, $5,000 here, up at let's say a 70-cent buy with $5,000 here. Let's figure out how much that's gonna be to bring your average down. So we're down here at, what's this, just under 7 cents. So if we want an overall position at roughly midway, 44 cents, what do we have to do? We have to buy here with $5,000. That puts our position here, right smack bang in the middle. You now hold $10,000 at about 45 cents. Now, what happens when you wait, like when you add more weight to that lower buy? It'll bring your average down even better. So, I mean, not everyone has, $20,000 lying around, but let's just, for argument's sake, say you have the time, because we're in a crypto winter, so to speak, to do accumulate around this area over time $20,000 for the sake of saving your shitty buy here, 5,000 at 70 cents. If you buy $20,000 of Doge, and I'm not saying you should, but if you did, this is just an example. This is not advice, but if you did, your average between these two would be somewhere a lot closer to these levels down here. There is a way to calculate this. I've got to try and remember how that works. I think it's a weighted average calculator. Let me find it. I've got it in here somewhere. Okay, the weight of our first buy was $5,000. The value that we bought at was 70 cents. So 0.7. 0.7 of $1. And then the weight of our second buy to rescue that really bad position is 20K at what value? Let's just call it 7 cents for the sake of being simplifying it. Okay, so what is our new position? What's our overall position? We now hold $25,000 worth of Doge at an average price of 19.6 cents, which is a hell of a lot better to hold a position at 19 point something cents than 70 cents, when you're talking Doge. So let's mark that out on the chart. What have we got that? 0.196. Not bad. That's not bad recovery. That's a much better landing spot to be in preparation for the next bull cycle, to be somewhere in this vicinity, which is a lot more achievable than trying to get Doge to come back up to 70, That's, at least it's in the realm of possibility. Much more so than 70. And I'm not saying that Doge can't go to $1. Surely it can. It surely can. Each cycle we've seen, each cycle top is higher and higher each time. So, yeah, that's awesome. Sarah's at an average of 20 cents now from starting at 58 cents. So that's, the power of dollar cost averaging. Coins divided by total amount spent gives you an average. Yeah, perfect. Great music. So yeah, if you want this calculator to make it real simple for idiots like me, that's a link to it there. Rapid tables. It's a nice weighted average calculator, and it just shows you the power of dollar cost averaging. If you buy, it's kind of like a seesaw. I think I've done this analogy before, but let me see if I can explain it again. When you have a seesaw, you have the pivot, balance. Now, when the pivot sits perfectly in the center, you get a position in the middle. Hopefully this makes sense. Okay, so there's your bag of money, and there's your bag of money at a different price. However you think with markets, it's a vertical seesaw, but this is just to explain it horizontally, as using the analogy of a seesaw. But if we want to change our pivot, if we want to change our average, so this is where balance. This is where the balance is. We'll just write BAL. We have to, and let's say that's our first buy of $5,000 right here, and this is our second buy of $5,000. That puts balance smack bang in the middle. Whereas if you want to have price come closer to your second buy at a cheaper price, not only, yeah, obviously the buy does this, but to achieve balance, it now comes over here. See how your price changes? It shifts toward the bigger buy. Maybe this is complicating it more than it needs to. But this is what I think of. This is like mentally what I think of when I think of like achieving balance in positions. So to balance, yeah, to get a seesaw board balanced, when you're dealing with different weights, you have to change the pivot closer to the heavy weight, and then it balances out. I mean, obviously, if we were back in the middle, this would shift down, and this would be unbalanced. Like, yeah. Anyway, this is fun. So up here. Now I'm just sort of getting lost in the drawing, but yeah, that's unbalanced. So to bring that balance, obviously shift the position. So this is essentially what dollar cost averaging, weighted averaging is like, except the seesaw is a vertical axis, not a horizontal axis. And you know, if you stack as many rocks as possible down the bottom, your pivot, which is your position, will be a lot closer to the heavy buys. So that's the point. And that's the power of dollar cost averaging, to improve really bad bags in coins, like if people bought at 70 cents on Doge. All right. And that's the beauty of a crypto winter, is you've got a lot of time to recover, you know, or improve your position. So as soon as the bull cycle hits, you're back into profit a lot sooner. You know, what was that, a 20 cent? Basically, let's call it 20 cents. You're into profit sooner, rather than having to wait all the way for price to come right all the way back up here, which may not happen, but you know, we're all rooting for it too. We're rooting for Dogecoin to get to $1 at least. The thing that's going to get it to $1 is total market cap going well beyond its previous all-time high, which I think is quite possible thanks to Bitcoin. Let me go to total. So the current all-time high for total market cap is $3 trillion. So can we double that in the next cycle? Can we get it to like something like 6 trillion? I mean, let's see what the previous all-time high was for crypto back here in the previous bull cycle. 761 billion. Let's be kind to the price. Let's say we got to 800 billion, which is, you know, 200 billion off a trillion. But yeah, we more than tripled in value between those between those highs. So can we triple value from previous all-time high again? It's going to take a lot more money to triple 3 trillion than it does to triple 700 billion. You know what I mean? So, and that's something you have to get careful. Don't get stuck in the sort of the thinking that just because we tripled back here does not mean we can triple back up here. Because if you look on a logarithmic scale of Bitcoin, the returns are diminishing each time. So, you know, back in 2014, you were probably like 10xing or more off previous all-time high to the next one. And then you know, each high after that is going to be diminishing as the price moves higher. So to expect a tripling off the previous all-time high of total market cap is, I think, a little bit ambitious. I don't think we're going to get to 9 trillion at the top of the next cycle. I'm all for it. If it happens, great. But yeah, definitely not targeting that as my target. Maybe we'll see, if we're lucky, we'll see a doubling of the previous high, like maybe 6. I don't know. You can see how the slope the highs kind of slope off. If we go weekly, I might be able to get a better idea. If we use a curved line, get curves again. Might be in the drawing. Here we go. So yeah, these highs to that high. See if we touch those highs, you can see the trend starts to flatten the projection. But yeah, I mean, it really depends. Like, what kind of adoption to crypto do we have within the next 5 years? It might. How cool would it be if this happened? Like, where the curve started accelerating. I mean, that'd take a hell of a lot of money to accelerate it. I don't think there's enough money in the market to do it that high. But yeah, you get what I mean. Anyway, I'm going off in a tangent. So let's go back to how things are happening on Bitcoin in the here and now. This high is what we managed to achieve yesterday. Well, a good, 4 hours ago, 4 or 5 hours ago. Not really close to the previous high or the high before that, for that matter. So, and we are, I did say that we may get a retest of 20 to see if it's going to hold. But yeah, it's interesting to see how it plays out. It definitely looks like it's on a short-term uptrend because of these higher lows. Got a low here, second, third, and then with any luck we might get a fourth low that's higher, and then travel up to test the top of the pennant. But yeah, we'll see how we go. How are we doing for time? 43 minutes on the stream so far. So now with the rest of the market, I'm just going to check Ethereum as well. Yeah, similar kind of story to Bitcoin. It has come back down below previous all-time high in a big way. If any of you are Ethereum supporters, or bullish on Ethereum long term, then yeah, prices below 1,000 have been pretty nice to snatch up. You'd have to be quick though, because that was only down there for 2 days at best. All right. So I'm probably gonna wrap it up here for this stream. It looks like in that poll we got 30 votes. There was 57% said that we're going to be breaking down out of that Bitcoin pennant. So I am kind of with you on that. I think that's where I'm leaning as well. Just as the textbook play out of that would be down. Yeah. Anyway, thanks for tuning in, and I'll catch you guys on the next stream. All right. Take care. See ya.